Welcome everybody to this month's presentation from the Calgus fund. I have a really nice and interesting company for you today that I think is one of the great companies on the Stockholm Stock Exchange. Market cap is 40 billion. It has its base in polymers, rubbers and plastic. It has done a fantastic job over the last 10 years to move the margin from 9% up to 13% by portfolio management, selling bad things, making bolt-on acquisitions to improve the total structure of the company that has 4 different divisions. The stock came down from 210 down to 145, and I think now it could be an interesting time to look at the stock, and I'll walk you through some points that I think are interesting. Yes, as I said, the management has been really good. He's called Peter Nilsson. He's been there for 12 years and he has grown the companies on a stable basis around 10% a year. His ambition is to grow between 5 and 8 and also use bolt-on acquisitions to attain this. Margins, objective to be above 15. He's now at 13.8 last year. And he's, as I told you, come from 9% 10 years ago. It's really good job, I think. Where are they active? I told you it was polymers, rubbers and plastics, so they sell to transportation industry, farming and forest, infrastructure, oil and gas and aviation. Now what's the story? Well, at the moment oil and gas is not a big division, but it's a problematic division for Trelleborg. Since oil prices collapsed in 2016, the business has been really tough and they're making a loss at the moment. When I listened to Peter Nilsson the last time, a few weeks ago, he anticipated that things are going to start to look better in the fall. They have orders coming in, they hope to start delivering in the fall. So hopefully 2020 oil and gas should start making a little profit and look better. Another thing that's been a problem for the stock and the perception of it, and a worry among analysts, is the agriculture tire business that they bought a few years ago. It's based in Czechia. The agriculture tire sells to farming, and last year we had a drought here in Europe. So crops were quite bad and farmers were hesitant to invest, which has taken a toll on the activity within the agriculture tires business. However, they managed to get a very good result anyway, and they also have internal efficiency programs in place. Looking forward, let's say that they keep on growing between around 6%, something like that, in the middle between 5 and 8 as their objective is to do. If they do that for 3 years, they're going to get to 40 billion Swedish crowns in sales. And let's say that they would reach the 15% target, the goal they have. That would mean 15% margin would mean an earnings per share of 15 crowns. In our discounted value model, we get the value of 180 crowns today. Should this play out? I mean, you never know about the cycle, business cycle, and things can happen, of course. But I think the track record gives you and believe that this actually could be attainable for them. So an earnings per share 15 crowns per share in 3 years time should probably above 200 price at that time. So I think, to sum up, Trelleborg is really interesting as a good management. I think we can, it's fair to assume that this story should continue. And maybe this slump here in the stock price down from about 200 to 145 could be used as an entry point for a new investment looking forward. Also dividend, I think it's 5 crowns per share, but just taken off the stock yesterday. So next year you get another 5 crowns in dividend. Thank you for listening and goodbye.